What's up, everybody? How you doing? My name is Sonia Jones of GIP Financials, your Mr. Miyagi of Money. And today we are talking about bookkeeping is not ... So we are debunking a lot of the myths about bookkeeping and how entrepreneurs view bookkeeping. So I just want to give you a couple of tidbits today about what bookkeeping really is and how I can kind of help you shift your mindset about the benefits of bookkeeping. So y'all ready? Let's get started. So first thing, bookkeeping is not an expense. It's an investment. Yes, bookkeeping is not an expense. It's an investment. This is what I mean by that. When you have a bookkeeper, an attorney, an accountant, a marketing representative, a PR representative, those are partners to kind of help you make your business better. These are subject matter experts that can help you get from point A to point B. So with that being said, you are compensating those individuals for their expertise to protect you and to also build your business up. So from a bookkeeping standpoint, I want to make sure that we talk about pricing, because a lot of my prospective clients ask about, how bookkeepers, how CPAs charge and what have you. In most situations, and they could differ, but I'm going to give you the two that are most familiar to me and the ones that I've used. Most bookkeeping is priced by the number of transactions or by the number of accounts that need to be reconciled. So when we're talking about the number of transactions, what I would suggest that you do, and in most cases, bookkeepers and accountants, CPAs are taking your bank statement, right? The number of deposits and the number of withdrawals that have to be categorized. Okay, so if you take your monthly bank statement and you tally those up, total them out, and what I would do, I would go based off of the most recent 3 months, okay? And I would average those out. So some bookkeeping firms do charge by the number of transactions that have to be taken care of. The second thing is the number of accounts that require reconciliation. So if you're not familiar with the term to reconcile, we're talking about making sure that all of the transactions that are connected to your bank account, if you're using accounting software, that they match the transactions that are in your bank statement. That's what we call a reconciliation. And now the thing with that, in the number of accounts, sometimes it goes beyond your checking account and your savings account. If you are a business and you collect funds from PayPal, Square, Venmo, Stripe, any of those, Clover, those are all accounts that also have to be reconciled. So that's one of the things that we talk about as far as establishing good money in or accounts receivable systems, because if you're collecting money from all different platforms, from a bookkeeping standpoint, it will be costly, because we have to make sure, one, that all of those transactions are accounted for, and then two, if you are including all of those platforms in accounting software, we have to make sure that all those transactions aren't duplicated from one account to the next, especially if all those PayPals and Stripes and Clover accounts, all of those payouts are going to your business checking account. So we got to make sure that we avoid duplication, and that costs money. Right? So again, bookkeeping is not an expense, it's an investment. And then another thing, when we're talking about the basic packages of bookkeeping, I think it's kind of go also with pricing. We also have to talk about the scope of work. So in most bookkeeping packages, it will include the transactions that are categorized. Those transactions have to be reconciled, and then also generating reports such as the profit and loss, the balance sheet, as well as the cash flow statement. Now, there might be other services like running payroll or budgeting, or if you have a grant or a loan that you're looking to apply for, and the bookkeeper may have to produce different types of reporting or may have to provide extra documentation for the grantor or the lender. Those might be additional services that will require an additional fee. So one, make sure that when you are partnering with your bookkeeper that you have a written contract that outlines what services are being performed for the certain amount of money that you're investing. That's very, very important. Okay? And then the next thing is, bookkeeping is not a hands-off task for the owner. You heard me right. You can't just give us your stuff, your receipts, and then say, all right, I see you later. That's not what proper bookkeeping is. You as the owner, you have an obligation to yourself and to your business to know what's coming in and out of your business and how those numbers, those metrics, those KPIs are going to help you with your goal planning. So repeat after me, CEOs. Say, know your numbers. Let me hear you say it. A little louder. Say, know your numbers. Let me hear you say it one more time. All right. Make sure you say it with your whole chest. You CEO, you have to know your numbers. You have to expect reporting and explanations about those numbers within those reports. So remember what we talked about before about the contract. When you engage with a bookkeeper or a CPA, you have to make sure within that, sometimes they call them contracts, sometimes they call them engagement letters. You have to make sure that within that scope of work that they are generating reports for you and also providing some type of analysis to help you interpret what those numbers mean. Okay? Because this is how fraud occurs. I'm just going to say it. So CEO, it's up to you to make sure that you are not being taken advantage of by said professionals. You have to play your part. And then last but not least, bookkeeping is not tax filing. Those are two separate tasks. Okay? I tell everybody, GIP Financials is a bookkeeping firm. We do not file taxes. However, we do partner with G1 Business Group of Memphis, Tennessee. We do have a tax preparer that is of similar core values, similar service mindset that we partner with. So also make sure when you're interviewing for a bookkeeper or a CPA to see, one, if it's a CPA, they should offer tax filing. But if not, ask if they have a referred partner that they outsource that service to. Okay, so bookkeeping and tax filing are two separate tasks. Bookkeeping helps you organize your financials and have the data ready for your tax preparer to file those taxes. Okay, and then also ask your tax preparer if they file business taxes. I did a previous video about the 4 financial roles and the tax preparer. It is up to you, CEO. Whatever tax form that goes with your business, whether it's an 1120 or a Schedule C or K1, whatever it is, you need to ask that tax preparer if they have experience filing those particular forms. The more detailed you are will let you know if that tax preparer has experience with filing those forms. Because trust me, in most situations, they are not expecting you to know the names of those forms, right? So you got to come in knowing what you're talking about. All right, so I hope that this part 1 of Bookkeeping Is Not has helped you. And if you are thinking, man, I didn't know anything about what Sonya was talking about. I think I need some help. It is halfway through the tax year. Time is ticking, y'all. You need to be proactive about getting your numbers organized for tax time. We got about 5 more months. at the end of before 2023 is over. So what you're gonna do? I'm gonna tell you what you're gonna do. You are gonna click the link below in the description to schedule a 15-minute discovery call with my team. Share with us what you're going through with your business finances, and we will be able to at least provide you a solution that will get you ready to provide those reports to your tax preparer in a timely fashion. All right, so that's all I got for today. I'll see you in part 2. Y'all take care. Peace.